It's sort of based on the SBA score template, which if you go online, there's a ton of resources that can actually kind of walk you through the process. This is where I run into trouble. I always want to do the executive summary first. Really, you need to come back to that. I mean, come up with an idea, but that should be your wrapping argument here. But start with the description, start with the vision. Talk about what it is you want to do, the history of your company, where do you want it to go? Talk about the market. What does the industry and outlook look like? What we knew, if you go to the next little point, is description of products and services. We knew we had something that no one else was doing, and we knew we could do it better. Talk about the organization of your company. Are you an LLC, a sole proprietor? Do you have partners? That's important for everybody to know. And talk about that marketing and sales strategy. You know, who is your market? Who are your customers? How are you going to get them? And then the big piece that, you know, the visionary entrepreneurs who I love and admire and don't focus on often is the financial management piece. How is this thing going to make money? You know, because unless you're running a nonprofit, which just has to break even, you're doing this to make money. You got to love what you do, but, you know, it's business. So talk about your startup costs and be realistic. Talk to other entrepreneurs and figure out what it costs them. You know, I put balance sheet on here, but it's probably not a heck of a lot of assets and liabilities to start with. I think a P&L or a profit and loss statement, which is also called the income statement in accounting terms, is super, super important. And then there's cash flow. You know, don't get in a situation where you've paid for your startup costs, but you're 3 months in and you got bills to pay, and you're not quite where you want to be from a marketing and sales perspective. The cash flow has to work. And then once you kind of vetted all
Jennifer,
of this, yeah.
The cash flow. Can you just for a moment talk about one of the other issues in cash flow, or you can come back to it. But I mean the payment from the client as compared with the payment of employees.
Yeah. So we're a staffing company, so we put people on our payroll as contractors, and they go work for other companies, or we do a direct hire placement. But all those people that work for you, you got to make payroll every 2 weeks. The one thing that you can't screw up is payroll, because then you're going to jail. That is just sacred. You have to get the payroll right. However, you're not going to get paid for 30 days, 60 days. Capital One, one of our biggest clients, 90 days. So that is 6 payroll cycles that we have to float. That means the money we make on the markup of that hourly rate has to cover that cost as well. And that's a tough thing to figure out. I mean, so a lot of those roles we've had to walk away from and say, we're not making enough money in order to cover, we're actually losing money by having that person on our payroll. That's not a good situation to be in. So you have to figure out the cash flow, whether that means putting 6 months of your potential operating expenses in the bank, means getting credit through a bank, through any other source. You just have to figure out, you're going to have to wait to get paid, but you have current expenses that have to be paid first. And the one thing that has to be paid before anybody else are your employees. And then once you kind of figured that out and you think you're going to make money and you got a great idea, then come back and rewrite that executive summary. And I bet you'd be surprised what changes. Are there any questions about our business or lessons learned?
How do you do your recruiting?
That's a good question. So I think what makes us a little bit different is we're very organic in our searches. 85% of our hires last year within 2 degrees of separation from our network. Someone we know, someone they know. And I think that took a lot of risk out of the hires. When your house is on the line as collateral against a credit line for a company, and it's your risk and your reputation, you have to make sure that the person you're going to hire is going to do a great job. So going to something like Monster and looking at a resume, that just doesn't do it for me. I got to do a little more due diligence and do a little more research. But if I know that it's my son's preschool teacher's younger sister who just graduated from college and is looking for an entry-level role, I can help her out because she's probably not going to mess up into a terrible job if she knows that we have this connection. We use a lot of listservs that are neighborhood specific, with Yahoo groups, a lot of social media. I think that particularly in this economy, people want to help other people find jobs. So if I go to our company's Facebook page and say, I need a nonprofit accountant to work 20 hours a week in Northwest DC, I say, well, you know what? I know the perfect person who could do that, who's looking to get out of her 60-hour-week job.
Do you wait until you have a position?
And I think that's one of the interesting things about our company is that we're always marketing to 2 different segments. We're a B2C company, and we're marketing from business to clients because those are the people that pay us. But we also have to be marketing to candidates, so it's like a sort of or B2C on the consumer side. We're a B2B company, but we have to do the B2C side, or we have no product to sell. And so we're always doing both, but I think we have to spend most of our outbound dollars and hours on the client side looking for new roles. That's the thing, flexibility will come. I mean, everybody needs more flexibility, so we have no trouble finding the right candidates. And I think we're often able to pick them out of bigger companies if we can offer them one thing that makes their life better. From a flexibility standpoint, it's the one thing that money can't buy. So if you're in a startup and you don't have a lot of money, you can say, how about, I know that your kids are in school in Fairfax County and they get out at 1 o'clock every Monday, like today. So I have to get somewhere to pick up my children. So you can go work from home every Monday afternoon. Well, if I don't have to set up after school childcare, that's enough for me to leave a full-time job where I would have to do that otherwise. So we've been able to successfully pluck people out of bigger firms that are less flexible and put them in smaller firms that are just, you know what, I don't care where you work. If you work from home, you work in here, just get the work done. So I think the upside of the down economy has been a real results-driven marketplace. There's not a lot of face time involved, just get the work done. Keep selling business, keep your clients happy. Keep going. Funny, I was at an entrepreneurship panel a couple of months ago, and I was listening to these really amazing entrepreneurs, these big ideas, and they've taken a lot of venture capital. They've been in business a year or two and still hadn't made money. That just was not an option for me. So, that comes back to the financial management piece. We knew we put a little money in the bank, but we made money from the first quarter on. But, we're a lean company. We didn't have to produce anything. We didn't have to, make something. We didn't have to lease, factory time. We are, a professional services firm. And there's quite a bit that you can do for free or cheap from a technology perspective. I work in a shared office space, for example. I don't need a big physical office. I only go in the office 3 or 4 days a week, so I share with other entrepreneurs. That keeps our operating costs low. When we need something, when we needed to hire a controller, when our payroll, when our annual revenues got to be about $1 million, we realized we shouldn't be running the cash flow. We're good, we're not that good. So we hired someone, but we didn't need a full-timer. So being able to hire part-timers on and growing our own model has been very
Are most of your employees part-time spouses?
part-time, that's a good question. I'd say most are part-time, but we certainly have enough people that work full-time. They just work flexibly. Like I certainly work full-time. I just don't work a traditional 9-to-5 schedule.
Great.
Are most of your employees or 1099?
Most everyone is an employee. The IRS has really cracked down on the 1099ers because they're looking for tax money. So you have to satisfy these 12 criteria to be an independent. I have one woman who works for one of our clients 5 hours a week, but she also has like 22 clients. She's a PR person. She writes press releases. Now that makes sense. She satisfies the criteria. But most of them are our employees and we're paying taxes on them.
And that helps the client too, because the client really doesn't want to be, they want it to, the
They want us to take the
contract-
risk.
Yeah, yeah, exactly.
Yeah.